Today I will conduct a very detailed review of the supermicrocomputer. We will mainly focus on the company's indicators, analyze its reports. Why has it grown so much? We will also touch on its volatility. We will see where it can go and according to the volatility smile, where the options are directed, and everything similar. Also, we will analyze why, in my opinion, the potential for movement in this stock is over, and most likely it will simply face a downturn. Let's start from the beginning. What does this company do? Supermicro is a leading provider of application-optimized, high-performance server and storage solutions that address a broad range of computational-intensive workloads. This is its official website. Here, let's look at its presentation. This is the financial report for the second quarter of 2024. What do we have at the moment? Revenue $3.66 billion, 103% and 73% continued record demand for AI systems at rack scale. H100 key component supply gradually improved throughout the quarter, continued development with and Grace superchips enabling first-to-market position. As we can see, a very interesting graph. This is our comparison of the supermicrocomputer with the overall industry. And this is growth, and as we can see, the supermicrocomputer is outpacing the entire industry, and it is doing so very rapidly. Let's look at the path to $25 billion. What is their forecast? What do they provide? Full solutions. We see incredible revenue growth. Yearly, we have 103%. These are, of course, incredible figures. But I want to remind you that the stock, of course, did not grow by 100%, but by 1,000%. The question of whether this growth is justified. I do not think so. Here they show the overall revenue structure. In these graphs, we see that yes, the company is growing very well. I won't say anything negative here. If we look at the report, after which it grew very strongly, then the report, of course, was very good. There was an 8% earnings per share and a whopping 23% revenue increase. But again, we see that there were previous quarters where there were also very serious earnings and revenue, but after such, the stock, as we can see, did not grow for a very long time. We will examine the financial indicators of this company in more detail, but I tell you that fundamental analysis does not guarantee the growth of this stock. But perhaps the stock will grow, but in the moment there is no connection to fundamental analysis and price. So do not try to predict stock movement based on fundamental analysis. Fundamental analysis works only over a very, very long period of time. Let's look at its financial indicators. As we can see, it has deviated greatly from the fundamentals. Let's look at its financial indicators. As we can see, it has deviated greatly from the fundamental prices. The long-to-money ratio is very acceptable. Of course, there are no problems with servicing debt. It has none. We also see very strong revenue growth. At the moment, the company is slightly diluting its capital, meaning it is doing additional missions. Perhaps these additional missions are not done directly, but at the moment, as a reward to executives, the volumes are not very large, but in any case, there are no buybacks yet. If it announces a buyback, of course, the stock may continue to rise even further in the future, but that's a completely different story. Again, if we look at the company's financial stability, the long-to-money ratio on the balance sheet is very good. Also, we have very good growth, time reservation, and also the forecast that the stock will grow rapidly over the next few years. The gross margin is also not bad, 16%, and all that concerns fundamental indicators. It has very good coefficient conclusions. Here, everything is burning red, and all the other coefficients, they just burn red, because the company is clearly at the moment, due to such strong growth overestimated, there's nothing you can do about it. It's pure truth. Let's also look at this company on TradingView. In principle, there is nothing new here. It's all the same. As we can see, the growth is very strong across all indicators. Over the past 2 years, the company has relaxed by 50% in terms of revenue. We also see very solid forecasts that in 2024, it will reach $21 billion. In 2025, it will reach $30 billion. And in 2026, it will hit $35 billion. If this trend continues, then I agree that in 3 years, the valuation of this company will be justified by its current price. Here again, I want to make sure you understand me correctly. I'm not saying the company is bad. The company is really very good. It has very good financial indicators. It is growing very fast. No one denies that. The company is really very good in all aspects, in all fundamental characteristics, there is no doubt. Very decent margin, again, very solid growth. But its biggest problem is its excessive price everywhere. The company can be considered a good investment, but only at a completely different price. And that price is at least $300. You understand, I assume? Again, I cannot predict price movements. Forget about it. But as for options, which we will definitely touch on today, I can assume that if the price falls to $300, that's at least. But in a bad scenario, I admit it could fall to $120. Yes, that could happen too, if we have a very serious recession. If it falls to $120, I wouldn't be very surprised. The question is whether it's worth buying now or not. My friends, again, I cannot predict price movements. But even if, for example, the stock were to rise to $100 or $200, that could happen in theory, but where could it fall? It could fall to $300. and that speaks to a poor risk-to-reward ratio. This is the most important thing that a trader should know, the risk-to-reward ratio, and at the moment, it is not at all on the trader's side. Again, the options volatility is very high. This indicates that the movement is coming to an end because options are already becoming extremely expensive and gamma squeeze has already occurred. Therefore, personally, in my opinion, there is no point in risking to gain just a little because the risk is very, very high. Yes, if you are a day trader and trade intraday, I want to say right away, I don't trade intraday. It's not my style and not my strategy at all. So I cannot give any advice on intraday trading or even day trading. Here I only trade using options. Now let's look at the most important thing, volatility. Yes, we had a volatility spike. At the moment, it is starting to decrease. If we look at the volatility smile, it is quite flat in the call direction. But in the direction of decrease, we see a very serious volatility rise. I also want to show you this chart. These are the most traded options contracts. If we look at the calls, the most traded contract is the 1000. Well, that's logical. The most traded put contract is the 500. Who sold options? The market maker, he must collect both the 1000 and the 500. As we can see, the contracts here are very close. That is, the blue columns are the 1st of March. Therefore, options are about to expire very soon. I want to say that 1000 and 500, these are very, very large blocks that the stock is unlikely to overcome at once. But if it does, then we will have cumulative effects, and the stock can fly higher on impulse. But again, blocks of 1000 and 500, remember this, halfway through, until these options expire, we won't go any further. This is very important information. According to options, you can draw a lot of conclusions. Let's also look at the option spread. Barton didn't say how much it shouldn't be touched, but we see that there is actually no liquidity here. The options here are not very liquid. Look at this huge spread. Such spreads, of course, cannot exist for normal stocks like Apple or Microsoft. It's just staggering. Even for a stock like AMC, there is no such huge spread, therefore it will be very difficult to play it on options. But I have already shown strategies on options. In this video you can watch, there I fully explained how you can manage it properly and trade to make money on it.